Okay, so let's start with the first slide, which is who does CFA FRM, why do they do, and look into candidate profiles. Though I will try to restrict most of the theme of discussion around who does it in India primarily, but I'll try to give you a global perspective to, given my limited experience, I'll try to cover that also. So nowadays it has become almost a hallmark of excellence in financial industry. And in that sense, you will see pretty much anyone who is interested in capital markets, portfolio management, equity research, financial risk management has already done certain levels of these two courses, are for sure, and with a lot of confidence I can make this big statement that pretty much everyone has evaluated. So when I say pretty much everyone, MBAs, CAs, commerce graduate, engineers, people having experience in diverse fields including IT, including manufacturing, including on the retail banking side, anyone who wants to make a move into capital market side wants to evaluate it. Let me briefly talk about some of the reasons why these different categories of individuals do these certifications. So one of the reasons, and this is more like an empirical assessment, obviously there can't be any structural analysis about it, based on what we have seen a trend of last few years, last 4-5 years in countries like India, is that because obviously post 2008 crisis, world has become very competitive. So, and in some of the countries like India and China, things have been competitive for forever kind of a thing. It's very important that you add that extra zing in your career in your profile, especially if you are looking for an higher education from top institutes, which can be, let's say, IIMs, ISBs of the world, or even some of the top 10, 20 colleges abroad. And this is not only restricted to MBAs, this is also common for people who are trying to do specialized courses primarily in the field of quantitative finance, which is MFE. So MFE, as some of you might be aware, is basically a course which is basically a precursor to the people who wants to go on the algo trading side, are basically programming-led trading in a layman's word. Right? Most of these big MFE colleges are based out of USA. There are some good colleges in UK and a bit here and there in Singapore and Hong Kong. Unfortunately, we don't have many credible names in India in that space. But anyways, without diverting too much, even those people who wants to go into fields like MFE, and let me give you a typical profile of, let's say, an engineer, a bright young engineer who thinks he's good in computers, he's good in analytics, and he wants to do some of these courses. It's important that he gets that primer on what exactly financial products. I mean, you can't expect to learn everything in a span of 1 year or 2 years in some of these courses like MBAs and MFAs, and that's why again we are seeing a huge trend of young graduates, primarily engineers, and from other fields also, but again primarily engineers who wants to do these MBAs and MFAs in global context. Are some top colleges in India, they are pursuing CFA level 1 and FRM level 1. Not only to get into these colleges, because you will understand that life is very tough, you get a good CAT percentile, you get a good GMAT percentile, still it can be very tough to even get an interview call. So again, idea is to differentiate your profile, and that's the reason people are trying to do some of these certifications. During your MBA in placement programs, a lot of investment banks come to some of these top tier colleges. Again, it becomes very easy decision for them. If let's say you are at least CFA level 2 or you have basically cleared FRM charter, if that happens, obviously you again get an edge during your placement. And for that reason, when I say MBAs on this slide, it basically meant people who wants to do MBA, or people who are doing MBA, and in that sense they want to get an extra edge during their placement process, right? Meantime, Tejas is saying, why am I being muted? So Tejas, because you can see, I mean, pretty much we have more than 30-35 participants. If we keep everyone with audio on, it will be very noisy. But if you think, I mean, if you have any questions, please raise your hand and we can talk, right? Otherwise, default mode is basically everyone is on mute except me, right? Just to make the session little more comfortable to everyone. Okay, now CAs. Coming to the second point was CAs. Again, CA is a pretty renowned course in India. It basically sets you up for anything in accounting, in taxation. People who do CA, obviously it's a very rigorous course, so they do well. But what happens is CA fundamentally, the orientation is more on the financial rules, accounting, etc. I mean, you get capital market exposure, but not to that extent. And second thing is, it doesn't probably prepare you so much about investment banking profiles, some of market research analytics, credit research analytics, etc. So again, due to competitiveness of the word, this is a very new trend and very increasing trend kind of a thing. I will not comment good or bad, but then it's just a trend, which is that these CAs are doing CFAs, and it's very easy for you to do a deep stick to realize that it's happening. Commerce graduate, again, I will say they do not do FRM, and logically so, because when we'll move to further slides, we will talk about what are these different tracks. But again, we see a lot of commerce graduates trying to do CFA, because again, their intent is some of the graduate programs in India is not that time demanding, etc. So if you're bright, if you think that you can do something else also, it makes absolute sense for you to start on international certifications like CFA, right? Engineers I briefly talked about earlier also, but one of the major reasons is, fortunate and unfortunate trend in India is a lot of engineers are employed in IT. That field in itself is great. It has been a sunrise sector for India for so long. The only challenge is because it's such a big industry which is fundamentally people driven, it will be fair for me to say that there are close to 0.7 million, 0.5 to 0.7 million competitive young guys working in top tier companies like IBM, Accenture, CSC, Infosys, Wipro, CTS, etc. doing pretty well, but at some stage they will feel stagnation, because apart from IT skills, some of them, at least I will not say all of them, but some of them, especially those who want to go onto the business analyst track, are people who want to add domain flair to their technical abilities. They would like to do it. The only challenge is for them, historically, choice has been an MBA, but in current environment, one, the job uncertainties are there. Second, the return on investment on MBAs has been fairly low, because cost of MBA globally and surely in India has gone up very high. Then there is an opportunity cost. It's not only applicable for engineers, pretty much any graduate who's working. The choice between MBA and CFA FRM, though in later slide I'll tell you how we should not look, it's MBA versus CFA kind of a scenario, but unfortunately that almost boils down to be the case, especially if you're already doing well as a graduate and you're doing well in your career, 3-4 years, you have proved yourself in your organizations, you find it probably too risky a thing to do to get into an MBA college, be without job for 2 years, and then go through that uncertainty. A much easier thing becomes is when you do some of these equally renowned courses, which adds to the value which you were otherwise looking for from MBA. It being a correspondence course obviously helps, because then you need not to leave your job. In that sense, you save some of your opportunity cost of salary for one kind of a thing. So I'll talk about these factors in a little while. But more than money and more than these opportunity cost and placement, etc., I also want to talk about a very important factor called BFSI being 40-45% of IT industry. Right? So you take any IT company, you'll realize that 40 to 45% of revenue comes from BFSI, which is obviously a very broad definition of banking, financial services, and insurance. But all those people who work in this area within IT space, it becomes very natural for them that they want to enhance their industry knowledge. And what better for them to do something which is basically having a global context. See, another problem with a lot of education, local domestic education, is that it will primarily talk about what happens in that particular country. But when we talk about some of these courses like CFA, FRM, PRM, CMT, etc., these basically teaches you something which is relevant in a global context, pretty much standardly applied in whether you are in the UK or in Singapore or in Hong Kong or in NY, right? So that's about it. Let's move to the next. So MBA versus CFA or MBA with CFA. So that's what I was trying to tell you. Again, that's a very tricky debate. Unfortunately, we should never try to see things so clearly, but rather than being very judgmental about what is the answer of this slide, I'll try to talk about both factors. So, and I'm sure especially those of you who have evaluated some of the MBA degrees, see, again, this is a very open-ended kind of a class, webinar, and in that sense, many of you might be at different stages of your career, and some of the discussion during the webinar might not be relevant for you. A sincere apologies, because we made it very generic. It's very tough for me to be very specific about each one of you and your individual cases, and apologies if some of the discussion which is happening here, if you find it irrelevant to your specific case. But again, idea was to probably talk about some of the key themes around these courses and the factors which go in decision making. So coming to the context where I was saying, usually people try to make it look like MBA versus CFA. So let me talk about some of the factors. So if you today go to any global MBA, let's say London Business School or IE Spain or Harvard, Stanford, anywhere, to go to their finance department, you will see out of top 100 colleges, close to 65, 70, and that list is available on CFA website also. You go to any of these colleges, they very proudly say that we are associated with CFA Institute. And many of them even go to the extent of saying, if you will do first semester with us during your MBA, it will help you doing CFA, right? In fact, some of the lesser known colleges have even made certain credits linked to the CFA level 1 clearance kind of a thing. So in certain colleges, they give you an option that you focus on CFA level 1, you are exempted from doing certain credit courses. Now, why I'm telling all these factors? Just to let you know that how globally recognized it is, and even some of those colleges recognize this fact that the kind of learning you will get from this course will be pretty much equal, if not better, than what you will otherwise learn in some of these great MBA colleges. In that background, if you do a little bit of Google, you will also find questions where people are trying to compare CFA versus with, let's say, Ivy League MBA. To me, that question in itself is an amazing question, because irrespective of the answer, it told me when I started doing CFA, because trust me, I didn't have a background in finance. So, and I was not very young at that point in time. So I wanted to be very sure that whatever I will do should have a purpose, a recognition, a knowledge-based kind of a course. It should not be just another course where idea is just to give money and get a certification kind of a thing. So obviously people rely on Google, and when I started seeing some of these blogs where people were trying to evaluate it with different MBA colleges, one thing which immediately hit me, that even if the answer is not clear, the fact that it is getting compared to some of these colleges shows the worth of the CFA charter, right? And one thing I've also realized during those discussions, etc., and then the years which followed on, that we need not to necessarily see both these courses as a competitor to each other. In fact, most of the cases, these work as complement to each other. Having said that, there will be enough CFA charter holders who have advanced to such a stage in their life that they don't need any XYZ MBA degree to prove their mettle. There will be a lot of MBAs who have gone into slightly different track where probably CFA is not needed. So I will not say unless you are both MBA and CFA, you won't do well. I'm saying anything, and I mean there are other aspects which make you work in professional judgment. In fact, for that matter, you will always see a lot of guys who are not neither an MBA or a CFA, maybe plain graduates. But again, talking at a generic level here, I would like to see MBA and CFA as a complement to each other rather than as a competitor, and especially so if you're working in capital markets. Having said that, MBA purely from placement orientation still remains a better option than CFA, especially in a country like India. Because hard fact of the life is CFA is still relatively new course. Hardly 7-8 years back, not many people knew about it. Things have changed dramatically in the last 7-8 years. It will change for better for sure in future. But at current stage and probably in next 2-3 years kind of a time frame, if your only orientation is to get a good job from a good corporate, when I say good, it need not to be in monetary terms, but in terms of profile or a company, probably MBA is still the safer option, because the placement process is probably the easiest way to crack the best job, right? And some of you who are MBAs from good colleges here would agree with me on this, right? So purely from placement orientation, MBA still remains a preferred choice. But having said that, if you go to just do a deep district survey, go to any of big finance colleges of Mumbai, let's say SP Jain, Chandala Loja, Narsi Monji, or in Delhi, MGI Gurgaon, or any of the hands. And again, I'm making some of these statements with extreme sincerity that all MBA finance guys, at least 85 to 90% of them are giving CFA level 1 in top 15-20 MBA colleges in India. They have already done at least level 1 or level 2, or they are appearing into it. And that in itself tells the basic crux of my discussion here, that people who are in the middle of things, they see both these courses as a complement rather than as a competitor to each other. Apart from that, one thing I want to highlight about MBA, MBA surely gives you a more holistic idea about management. It tells you about certain things which CFA will never do, which is basically it will tell you what is HR, how does marketing functions, how does systems, operations. I mean, there are other aspects of a business. So if your idea is to become a CEO or a general manager kind of a direction, then probably MBA is still a better suited option. But if for whatever reason you have decided that financial market, portfolio management, equity research, venture capitalist, PE, these kind of tracks is what you want to do, economic research is what you want to do, probably given between, basically if you are hard pressed for an option, you might like to switch for CFA rather than MBA. Okay. So at this stage, rather than making it very monotonous, I'll be happy to take a couple of questions if you guys have any. Right. So we will continue to talk about it. I mean, probably by the end of webinar, I must have talked about CFA at least 1,000. I mean, must have uttered this word at least 1,000 times. But let me go through the flow which I have tried to make for this webinar. Happy to take questions till this stage. Okay, so meantime you guys continue with typing your questions on question box, and again, as I mentioned earlier, if any one of you want to have a word as in basically an audio dialogue with me, please raise your hands. I'll put you on the speaker. So moving on to next slide, which is what is the difference between CFA and FRM. So one thing you must have noticed in the previous slide is that I didn't talk about FRM, and in the debate between MBA and CFA, I didn't do that deliberately, and probably if you follow me for another 30 minutes, you will understand why. Meantime, Siddharth has a question. He's asking about job prospects after CFA level 1. Quick answer is a no, especially if you are an experienced guy and you are looking for a career track change. But if you are a fresher, anything is better than nothing. In that sense, CFA level 1 surely helps. But I will talk about this topic and this question in bigger detail if you happen to wait, let's say, another 15-20 minutes. So, what is the difference between CFA and FRM? Unfortunately, in webinars, I don't have an options to talk about a lot of things using my hands and in a visual sense. But I always use my hands to explain what is CFA. CFA is basically pretty much everything in finance. So if you look at the curriculum, they teach you about economics, they teach you about portfolio management, alternative investment, bonds, which is fixed incomes, equities, derivatives, ethics, balance sheet, which is extensively covered in financial statement analysis. So it is a generalistic course and it prepares you for multiple things. On the other hand, FRM is a deep dive and a very specific course about financial risk management. And it's not about the general risk management. So in that sense, it will not so much apply on, let's say, actuary. If you want to work in insurance industry, probably FRM might help, but then there are better courses and better degrees. So financial risk management is a very specific course about market risk management, credit risk management, operational risk management, and regulatory reporting in banking environment, right? So when we will talk about FRM, you will see that I'm talking in much pointed way compared to when I will talk about CFA. You will always find probably I'm talking in a very generalistic way because that's the focus of a CFA as a charter. Though still, if you want to say in one word what is CFA, then that one word will be portfolio management. But then other side of the portfolio management is you can't be a portfolio manager or an equity research analyst or anybody who is managing money on someone else's behalf without one knowing how currency market works. So in that sense, how you need to understand the macroeconomics, etc. How bond market works, what is monetary policy, what is economic policy, what are balance sheets, what are equities, derivatives, etc. Right, and then how does commodity market function, then how does FX market, OTC derivatives. I mean, list is endless, right? And as a portfolio manager, unfortunately, in today's environment where people easily move from one country to another and from one asset class to another, I mean, gone are the days when people will either put money in FDs, in stocks, and people pretty much have choices to compare across asset classes, and they want to decide the trading frequency, they want to decide the size of trade, they want to decide the risk return program, etc. So that makes it imperative for a CFA charter holder to pretty much know everything in finance, right? I mean, again, it will not be a very off statement if I say there is hardly anything left to be known beyond that. I mean, obviously, you can always master on a specific areas, but anything with worth its salt is already covered in CFA as a course. On the other hand, FRM goes much deeper. So that is one thing, generalist versus specific. Second thing is a lot of time people compare these two courses in terms of ease or toughness of doing it. For me, that's a very wrong way of looking at it, but unfortunately, that is how people look. When they typically look at CFA being a 3-level kind of a course, which will, let's say, take 2 to 3 years kind of a time frame, compared to FRM being a 2 level, which you can quickly do in 1 year. My simple take is, unless you're planning to do both, which again is not a very off idea, I will not recommend. I'm personally a CFA charter holder and a FRM charter holder. I did it because probably I was finding it fun to study so much, but I don't consider it to be necessary. Idea is not to just garner more and more certificates, but in case you're planning, and again, in case you're planning, you won't be a very exceptional kind of a guy, because if you do a little bit of LinkedIn search, you'll find that a lot of people already have done that. If that is not the case, then your decision should not be based on the ease of doing a course or the cost associated. I understand, especially if people from deeper economic background, for them cost also matters. But I will always say, compare it with any XYZ degree, be it MBA or any other course. I mean, things run in Indian context in 0.5 million, 1 million, 1.5 million, etc. Right? Compared to that, these certification cost you much less. So don't let you decide a course between CFA and FRM on one. It will be easier to do, let's say, FRM versus CFA, or FRM will typically, let's say, cost you what, $1,000 odd, so which is like 70,000. CFA will typically cost you 1.5 lakhs to 1.67 lakhs, which is like $2,500, right? So, but again, that should not be the criteria. I'll talk about the criteria, but I just wanted to talk about some pitfalls which people get into trap, right? Okay, so let me continue with the flow, but meantime, Vandana Venkat has a good question. How should CFAs find job given that there are no placements unlike MBA? Very good question. In fact, that was the reason when I was talking about why if placement is the only orientation, then probably CFA is still not good. I'll give a very specific answer to your fantastic question, right? And how long does it take to complete FRM? Okay, so I think some of you might be not aware what are the different levels and how long it takes. So just let me quickly go through it. So CFA level 1 you can give in June or November, that is 3rd Sunday of June or 3rd Sunday of November. Then CFA level 2 and level 3 you can only give in June. So technically it will take 2.5 years to minimum 2.5 years to complete it. So let's say you give in December, then you give in next show level 2 and then next June. This is obviously given you clear all 3 in one single shot, which is rare but not uncommon. Most of the people at least falter once in any of these 3 levels, and in that sense they typically take between 3.5 years to complete CFA. On the other hand, FRM you can give both in November as well as in May. In that sense, most of the people clear it in 12 months, otherwise max in 18 months, and that's again, I mean, case by case number can obviously increase, right? So FRM has 2 levels. You can both give in May or November. In fact, there is a technical possibility of giving both level 1 and level 2 on the same day. So you can actually do it in 6 months, but again, that's like being a Superman and chasing certifications. I will strongly oppose that idea, because then you are hardly learning anything. You are only focused on clearing an exam. Coming to the previous question by Vandana, that if there is no placement assistance, how does CFA work? If you allow me, Vandana, then I would like to park it towards little end, because I will be talking about career tracks, etc. At that stage, I'll cover that. Okay. So, Vinay, CFA is 1st Sunday of December and 1st Sunday of June. FRM is 3rd Sunday or Saturday of May and 3rd Saturday Sunday of November, right? Then Tejas has a question. He's asking, are there concepts common in both the exams? So in CFA level 1 and FRM level 1, there will be some 25 to 30% overlap. Apart from that, everything is different, right? And the common areas, obviously, concepts like stats, concepts like derivatives, bonds, I mean, which obviously will cut across both syllabus. So they will surely talk about duration, convexity, bonds, future and options. So that's the only common area. From there, it takes a very divergent route, right? Keshav has a question. Keshav, if you allow me, let me take it towards later of half of the webinar. So continuing with the flow, CFA and FRM are not standalone designations and supposed to be complemented with either an MBA degree or work experience. So I think I talked about that. So how should one decide between opting for a CFA and FRM? So I talked about how people talk about efforts and time required. CFA being broad-based versus FRM specific. Recognition-wise, I mean, even at the cost of seeing certain, I mean, some of you might not agree, but I mean, probably on any given day, CFA will be much more recognized than FRM, and logically so, because it trains you on a broader range of subjects and it is considered to be slightly tougher than FRM. Apart from that, actually there is not, again, it's not A versus B kind of a scenario. But purely on the technical front, probably CFA will be like, let's say 8 or 9 out of 10, and FRM will be like 6 out of 10. Career tracks. That's the crux of this webinar. So let me give you a few example. So typically, if you come to any of our classes or webinars, you will see in FRM batch, invariably close to 95 to 99% people will have a fantastic maths background, which basically means they will be either an engineer or a maths graduate. Again, I will not say it's a deal breaker kind of a thing if you don't have a maths background, but it becomes slightly tough. One, to understand the concept, second, to excel in that area. And when I say maths, it has both layer of numbers, which is more like aptitude. I should logically not call that as maths, it's more like quantitative aptitude. But I also, when I say maths, I also mean probably concepts like stats and a bit of calculus. Basically differentiation calculation you are not supposed to do, but let's say signage of sigma shouldn't bother you also, right? And another thing is about finance, and especially in the field of risk management and derivative pricing, etc. One thing, especially to the young guys here, I want to highlight that finance is a funny field, because here what happens is first things get derived and invented in industry, and then it goes to the standards, right? So Newton first invented, gravity's law, and then people worked on it, and then they developed the XYZ things, and then probably industry adopted it. But in finance, what happens is best of the best theories and innovative products first gets developed, utilized in banks like Goldman Sachs, JP Morgan, UBS, Deutsche Bank, and then they subsequently go to the tier 2 banks and some of the lesser names. When I talked about Goldman Sachs, I should have taken the name of some of the hedge funds also. So basically, very competitive world of finance. They do it with a golden age because they make a lot of money, and slowly those secrets gets passed on. Those secrets of better risk management or better trading strategies, and then they slowly go to the tier 2 banks and to the retail public, and then subsequently it goes into academics. Though there have been instances where academics have collaborated with banks to do certain things, but that has been mostly a rare phenomena. Still, industry is at least 5-10 years ahead of academics in general, at least in trading environment, in risk management environment. So what happens is, what we learn in FRM today is basically what has been used by some of these big names some 5 years back. So what is happening today in industry will probably slip into books 4 or 5 years down the line. CFA probably as a course will find a little more updated, because some things are a little generic and in that sense not very complicated and confidential kind of a thing. But in both places, again, finance is an applied science. In fact, many people will not even call it a science. They will say it's a cross between social science and science. But it's basically something which is driven by industry, not other way around. What is the purpose of this distinction getting highlighted here? Is that at no stage you will be industry ready, right? It's not that you'll be such a good guy after clearing a CFA and FRM or even doing MBA finance that you'll become a superstar in some of these companies. In most of the places, these certifications or some of these degrees will make you good enough to understand the jargons, the basic level of concepts, so that when these companies hire you, they can start training from them. They can always hire some of the bright guys, which they do even otherwise, but then for them it becomes much easier to hire someone who, let's say, already knows the basic difference between a long call having a different trade payoff vis-a-vis, let's say, short put, right? So someone who understands that will obviously, it becomes an easy hire for any bank, and that's the focus of these certifications, right? So it will not make you so smart that you will start making money on your own, or you can develop a trading software, etc. But it will make you equipped enough so that once you get into any big name, you can probably pick some of these crafts, right? So let me talk about some of the specific career tracks. So let me first start with FRM. So in India, people who do FRM, they typically come from IT background. Reason is again very simple, because those who are already working in banking environment, they will realize that number of trades, number of products, the size of data, everything is so large that it cannot be done obviously on Excel or a paper pen, right? You need sophisticated IT systems, and especially the field of risk management in the derivative space at least is very IT driven. A lot of hedge funds guys over the years have left jobs and they have started their IT shops. I mean, you must have heard about data, etc., algorithms. I mean, MarketWire. A lot of these big capital markets IT space is basically being run by ex-finance industry guys. Reason is, unless you have a strong IT systems, a lot of these things you can't do. So you need strong computing power. In that sense, risk management and IT is very ingrained in each other. In fact, most of the jobs, even after getting into risk management, you will always have a strong touch of those IT skills. So people who work in market risk, credit risk, invariably will be good in a basic level of programming, or at least, I mean, I will talk about some of these stuff a little later also. I mean, you'll find a lot of risk management guys being extremely comfortable with not only Excel, but even, let's say, with macros, with VBAs, or C++, etc. Right? So this is one track which actually recognizes your IT skills apart from your analytical and some of your Excel skills. Second thing is another major track in so typically if you do LinkedIn, you will find a lot of captive units of IB. So Goldman Sachs, JP Morgan, Deutsche Bank, UBS, Credit Suisse, Barclays, pretty much everyone, Bank of America, I can speak another 10-15 big names. Everyone has established a shop in India, primarily in places like Mumbai, Bangalore, a bit in Pune, Hyderabad, and Delhi, NCR. Right? We have some instances here and there in Jaipur and in Hyderabad, in Calcutta also. But fundamentally, it's a Bangalore, NCR, Pune, and Mumbai kind of a phenomenon. And number of jobs in these captive units might be surprised to you because it's hardly covered in media so much. It's almost more than 1.5 lakhs to 2 lakhs. And those number of jobs heavily recognize your certifications like CFA and FRM because it makes you a much suitable candidate compared to someone who doesn't have a background. Second major track I will say is some of the consulting units of, let's say, Wipro, TCS, Infosys, IBM, Accenture, CSA, Capgemini, etc. So they have their business consulting units. You get hired there. You become a good catch-up between pure IT guys and the pure business guy. So in industry, we typically call such people CTB, change the bank kind of people who do such a bridge work between IT unit and the business. Third major track in FRM is people who are working on the auditing side, especially utilizing their operational risk skills. And this job is not restricted to India. And in India, obviously, it will be mostly in Mumbai. But a lot of FRM graduates in India are getting hired for Gulf-based profile because a lot of Gulf-based banks have slowly started realizing the importance of market risk, credit risk, operational risk, etc. So that's one major track which I will say. Fourth major track which in FRM I realized that again a lot of people who have retail banking exposure both on the PSU bank side as well as private bank side who let's say want to move into the credit risk profiling unit or the treasury side of it, right? So for them FRM becomes a logical choice. At least in that space probably your IT skills are not that much needed. In that auditing space, especially if your focus is on operational risk, etc., IT is not that much needed. But on the first side and probably on the second side, your IT skills are little required. And again, for that reason, when I will say, if you are making choices between CF and FRM, apart from your liking about the area, you should also question yourself how comfortable you are with advanced maths and IT. Not that you can't be a great financial risk manager if you don't have these skills, but then you should realize that those who have will obviously will have an edge. So this will surely be one of the criteria. I will talk about other criteria also. Coming to, I mean, there will be a lot of other tracks. I don't want to make it look like that every job in India requires an FRM, and that's why I'll refrain from talking too much on this. So these are some of the 4-5 major tracks which I can look for FRM. Coming to the CFA side, see, CFA, if you talk to your colleagues, your seniors, your relatives, people usually associate CFA with equity research and portfolio management, and correctly so. So if you want to work in equity research anywhere, 90% of equity research happens out of Mumbai, and bit here in NCR, in Mumbai and Pune. then obviously CFA is a very good choice. And those of you who wanted to ask that if I do level 1, what is the job prospect? I will say equity research, at least at entry level, is a sort criteria field where you can try your luck and your candidate job. But that is one. Second thing is, if you do a little bit of Google, and again on this, I will not say that people got into this field because they have done CFA. I will rather say they were in these fields and they were doing reasonably well. They wanted to enhance their careers. They have done or they are doing CFAs. So if people are working in PE space or VC space or fund management, etc., they are CFA charter holders. I mean, a lot of them are, because it adds directly to their job. So if you are managing someone else's money, especially on the institutional side, the fund management, the mutual fund, etc., then obviously CFA is a logical choice. But let me give you a caveat. Don't be under impression that you do a CFA and you become a fund manager. It doesn't work like that. There is a long hierarchy of things. In fact, there is no easy options. No one gives fund management to a 21-year-old graduate. You have to prove your mettle coming from the lower value chain, which is you do equity research, you become good at it, then you go to small shops, you manage some small money, and then once you start showing the mettle, and then slowly you start becoming good fund manager. Within fund management, you should also realize that there is also another hierarchy. So probably somewhere in the lowest band will be mutual funds, because that's the easy thing to do, because you are managing people's money who hardly have the capacity to ask sharp questions. But once you do well in that space, you go on the institutional side where you start managing money on the behalf of corporates. There your performance will be evaluated much more critically. And then let's say you are good, you go to the hedge fund side, etc. So it's a long journey. People travel it little fast also. But I will say, don't consider CFA as a sure shot kind of a thing. But given that you don't have anything else, then probably this is the safest and the easiest route to try in that space. But finance is not restricted to equity research and portfolio management. And that is where I feel that some of you need to talk to your colleagues and seniors. Because what happens is, and I'll give a parallel with Bollywood, because let's say if you are coming from Tier 3 cities or Tier 2 cities, I do come from Tier 3 cities. For me, Bollywood is always about being either a hero or a heroine, depending upon your gender. Right? We never knew that Bollywood is such a diverse field that even the editor can be considered. I mean, it's a highly rewarding field, etc. Right? So there are glamorous jobs and there are non-glamorous jobs. Doesn't mean non-glamorous jobs are less rewarding or less technical. It's just like some things are the place of a certain industry. In that sense, for at least people who don't have very intense network in finance industry, for them finance is always about either stock trading or doing stock research. There is a huge set of jobs across the industry which need skills which you gain from certificates like CFA, right? So this list is so long that obviously I can't cover all, but let me give a few examples, right? So let's say you are doing any advisory business, right? Where you are going on the PE side, or you are going on the VC side, or you want to work as an advisor to any startup, right? You want to work on some of these research units of not only equity but let's say bond side, or FX side, or commodities side, or real estate side, right? Why only restrict it to research? There are a lot of analytics jobs. In fact, risk management also, though I strongly advocated about FRM, but you will find a lot of people who have cleared level 1, level 2, etc. and who work in these fields. So field is pretty vast. Don't restrict yourself in terms of that one, I will surely get a job in equity research or a fund management if I complete my CFA charter holder, or if I don't crack any of these two jobs, I'm a fellow. That thinking is obviously wrong, because CFA trains you for much wider range of things, and I'll talk about some of those jobs little later. Unfortunately, tracks like hedge funds, etc. are not so easily available in India. Most of the foreign institutional money of hedge funds which get invested in India are based in offshore locations like Singapore and Hong Kong, rather than being managed from Mumbai. But I'll talk about some of these tracks in detail also, right? So meantime, let me take a couple of more questions, and sincere apologies in case I miss any question here. That will surely be unintentional. So Vinay, I'm not sure whether I confused you or I told it incorrectly, but CFA is first Sunday of December and first Sunday of June, and FRM is third Sunday of November and third Sunday of May. Again, whether it is Saturday or Sunday, whether it is third or fourth, I guess will not make much of a difference, but this is one information you can easily get on Google, right? So it shouldn't bother you beyond that. Okay, is FRM more of quants? Vanda, to a large extent, yes. Siddharth is okay. Travis is saying for a job on the trading floor, which designation is more likely to get you on the floor? So Travis, again, there are better jobs. So if you specifically want to be on the trading floor, then you should first focus on getting MFE. So look at the courses of Master in Financial Engineering. Try doing it from some big institutes only, because market is tough. So do it solely only from top 15, 20. Don't get into a trap of some of these peripheral European countries, etc. I don't know from which country you are, so I can give you a specific pointer of some of these MFE degrees. But in case you don't have a finance background, don't rush into this degree. So if you have a little bit of financial background, then straight away go for MFE. That will take you to the trading floor. That has the most likelihood of taking you to the trading floor. Second thing is, for MFE, it's not only finance, but you should also have fantastic maths skill as well as an IT skill. So if you look at Master in Financial Engineering as a course, you will realize that they require a prerequisite of you knowing at least MATLAB or C++, or basically, and also doing a couple of advanced maths courses as a pre-credit to any of these courses. But let's say you don't have a background in finance, probably you can quickly do either CFA level 1 or FRM level 1 to at least get a background of some of these courses, some of these products, which will help you to get most out of these degree courses like MFE, right? And when I'm saying MFE, you should realize I'm talking about the algo-based trading, etc. So just to give you a perspective, I'm sure you must be having already that 70 to 80% of trading in USA nowadays are algo trading. It's not a manual trading as in someone giving an instruction. Though obviously those logics are designed by an individuals, but it's not a live design kind of a thing. So in that sense, computers work rather than human being work. Historically, trading as a job didn't require so much of qualifications, because things were pretty simple. An idea, if by trading you mean intraday trading, technical trading, etc. A lot of people without having very fancy backgrounds, they typically worked in that area and did exceedingly well. Now, especially with the introduction of derivatives, high frequency trading, etc., it is becoming increasingly difficult for people to not have a background and get into some of these areas. Another thing is because size of trades have become so large, especially on the big client side, that if you, let's say, want to start with a small shop and prove your trading metal, it's little tough for you as an individual. So, I mean, in 70s, 80s, it was very normal track for people to start with a small firm, do a good job as a trader, and then move across some of the bigger names. That track has become a little difficult because nowadays I think both retail as well as the small firms are at disadvantageous position vis-a-vis some of the big firms because of the kind of sophisticated tools some of these big firms have, right? So that's my 2 cents on this. Happy to take more questions. As I mentioned, it's not a showstopper. You being average in maths, but I will again advise you to have a closer look at both syllabus of CFA and FRM, and then take a call. As in, obviously, this your question can be answered if I will have more data on your background. Unfortunately, today's webinar will not give me the luxury to go through that, right? Which of these is more recognized in India? But again, recognition of CFA and FRM is CFA is more than FRM, both globally as well as India. One thing about CFA and FRM both as a degree is that it has global recognition. So let's say you are based out of any XYZ college in India, which is extremely good. So unless you are from IIT or IIMs, be on the BTech or on the MBA side, chances of you getting recognized, having a great degree in UK, or let's say you are working in Paris or somewhere in California. People might not know what is an MBA. In fact, they will never know unless they are an Indian, right? So you have done an MBA from an extremely great college in India, which was probably as competitive as probably any of these IIMs were. Let's say talk about Jamnagar, or NITI, or FMS Delhi, right? but then in London, probably no one will know. On the other hand, even if you are a CFA level 2, which might not be necessarily as great thing as probably an MBA from FMS, but let's say you're working in a global context, your counterpart from Hong Kong say, oh, but you are CFA level 2, you look very, very smart. Another thing I can tell you, CFA, especially CFA, and to a large extent FRM too, is much more recognized in USA and UK compared to that is in India. In fact, before 2007, if you were CFA level 1 or FRM level 1, etc., it was good enough to get you a job. Today's market environment is obviously very tough, but what I will say, the kind of positive reaction you will get from a London-based guy or a New York-based guy will be much better than compared to someone in Mumbai. I mean, in India things are still improving, so maybe a few years down the line recognition will be much bigger, but as we speak it is much better in some of these global financial centers like Tokyo, Sydney, Singapore, Hong Kong, etc. Right? Okay, Shabazz has a question, and good question actually. Would you please explain about work experience required for CFA? So for CFA charter holder, you need experience of 4 years. For FRM charter holder, you need 2 years of experience in risk management. Without suggesting that what needs to be done, but in general, it has been observed that CFA Institute is very stringent about work definition of what is that work experience is. So they are very particular about that. They say it should be in portfolio management or any job which assists in portfolio management, but it's a very loose definition. In that sense, even if you're working in IT as a business analyst, but your IT program helps people do fund management, etc., or risk management, etc., that job will classify as experience. But in general, CFA as an institute has been very stringent about the verification of your work experience. On the other hand, FRM historically has been much more lenient on, and people do risk management all the time, right? No jobs want you to not to do the risk management. In that sense, if you're working in financial industry or related fields, probably your experience will easily classify. But more than that, I will rather tell you one thing. You must have noticed during the flow of the webinar that I'm constantly talking about CFA level 1, FRM level 1, etc. The reality is you never talk about I'm MBA first year and then I'm going to complete it. I mean, no one talks about that, right? You either complete the degree or you simply hide the fact that you couldn't complete it. But this certification has one good, I will say, peculiar thing about it is that people do CFA level 1 and due to the commitment with work, for whatever reason, they get married, they lose the motivation, etc. People don't complete it. They do CFA level 1, they do CFA level 2, they do FRM level 1, and they still proudly talk about it in their resumes while searching for jobs because probably it still gets recognized, right? And it does, and that's the good thing about these courses, that for whatever reason, and again I will not say CFA level 1 or FRM level is enough. I will say surely you should try to do CFA level 2 or at least complete FRM. Unless you're a fresher, because as a fresher, having a CFA level 1 degree is any day better than having an MBA degree from Tier 3, Tier 4 institutes in MBA. And MBA in India, you have like 600, 700 institutes, right? So any MBA after top 20, as a person, I'll be much more comfortable having a CFA level 1 pass because I know he surely knows about a lot of things in finance compared to, let's say, any graduate who says that I'm very interested. See, your interest in a field is nothing, right? You got to back it up with the fact that you did something, and that something should be level 1 in CFA or FRM as a fresher, at least level 2 or FRM if you are already like 3 years, 4 years of experience, and in that sense you want to change tracks, right? So I hope I answered that. So anyways, one more thing on that same thing I want to talk about. Let me give you the number just to give the perspective. So let's say $100 is what you look for as a gain, and when I say gain, it's not only monetary gain but career enhancement gain when you complete your CFA charter holder. If you do CFA level 1, you get 20 out of those 100, 20, 25. If you do level 2, you reach somewhere around 65, 70. If you do level 3, you probably reach at 90, 95, right? Beyond that, it becomes chicken egg kind of a problem. Without work experience, you won't get charter, and without charter, probably you won't get an entry in that field. But the only good news is, at some stage that this circle ends, right? So I've never seen anybody who is like CFA level 3 pass and didn't get a CFA charter. Some people get it immediately, some people get it in due course of time. As long as it's not a showstopper for me, because I've already got $90 out of 100, one shouldn't be bothered about it, right? So that's one thing I wanted to also highlight, that don't get hooked up with charter holder. It's not a showstopper for you to mention it in your resume, and market and job market basically recognizes it, right? Okay, so Travis saying I am in Canada with an economics degree. Travis, maybe you need to give me a little more pointers on when you say trading, what do you mean by? If you talk about algo trading, etc., I've already answered it. But if you're talking about economic research, etc., then you should straight away look for CFA, right? And then doing some of the fundamental trading, I mean basically long-term investing, primarily in some of the simpler markets like stocks, cash equities, etc. Probably CFA will be a much better track. So let's say you think that MFA is not good for you, so do a little bit of Google. You'll get a feel for sure whether this is the area you want to get into. In that case, for you, CFA will be a much better choice, right? Let me complete the flow before I take few more questions. Okay, so CFA I talked about. The course was started in 1960s. Right now, globally, there are 90,000 CFA charter holders. In India, that number is a much smaller number, obviously 1,000. That's because the course has become only popular in the last 7-8 years. Second is obviously it's still very competitive course. I talked about career advantage, practical skills. I'll talk about that in a little while. Another good benefit about FRM and CFA, and good that it came, and that's why I like to follow the slides, because it brings structure in the discussions. About both these courses is the community benefit, right? One thing people should always try to understand the difference between finance industry and the service, let's say any good job market industry, like let's say IT or normal retail banking, etc. So the capital markets number of jobs are much smaller, right? These are highly rewarded jobs, but competition is very high. You will rarely see a newspaper-based ad that I need 25 analysts in Goldman Sachs. I mean, it doesn't work like that, right? There will be like 2-3 openings. Most of the times it gets filled by networks, someone's recommendation, etc. And when I say network, you should not take negative connotation as in you need jacked up, etc. It's just like when you have opening, you don't have time as an employer to probably look beyond the limited circle. So if you happen to know someone, he says, okay, I know this chap is very good. In fact, this works much better in Western countries and especially in smaller firms. Most of the hiring is basically reference based. When I say reference, it's just a reference for your candidature. Obviously, you have to clear that interview. So community helps, because let's say you don't know any, you don't have any maternal uncle who works for Credit Suisse, right? So that's not your fault, right? In that case, probably CFA and FRM helps, etc. Because then you also get a chance to interact with some of these industry veterans. It becomes like an alumni meet. Only caveat is, in India, both community of CFA and solely for FRM is still not that great. It got started building up in the last 2 or 3 years. I see a huge traction. So in fact, in the last 6 months, I'm seeing a lot of CFA events in Pune, in Bangalore, in Delhi, etc., where industry veterans are coming and candidates and charter holders. In fact, as a candidate also, you can join these events. So you get a chance to interact. And in those 5-10 minutes, it's almost like an informal interview, right? If you can impress someone, you can always pass on your resume and can expect an interview call, right? Beyond that, obviously, it's in your hand. So this still remains the major way by which jobs are filled in finance industry, right? And in that sense, again, that is one reason why CFA FRM is pretty popular amongst students as well as job seekers, right? Okay, so this is what, again, see, who had CFA charter holders? So I talked about mutual funds, I talked about investment banks. Broker dealer, I'm happy to take, but then I'm not sure how many of you will be able to. So these are basically sell-side jobs. I mean, some of you who have a background might realize that these investment banks, not only they do merger acquisition advisory or fund management, they also do the broker dealer, where they do the market making in some of the complex derivative products. And again, this is what I was referring about Bollywood, right? It's not only about being a lead hero or a lead cost, it's also about a lot of those technical jobs. So broker dealer classifies in that bucket, right? The banks, the private client wealth manager, advisor, hedge funds, fund of hedge funds, these jobs are obviously rare in India. Insurance companies, again, not, we don't have big insurance companies in India. I mean, most of the market share is captured by LIC, which for a large extent has a different a different kind of a hiring pattern compared to some of the names in Western world. So I'll cross both hedge funds and insurance companies and pension funds in India. In fact, I'm yet to see a trend where regulators and academics are entertaining a lot of CFA FRM, but globally it's a big trend. I mean, you look at some of the professor profiles in some of the top universities, they proudly talk about having completed their CFA charter holders. So many regulators also, right? Graph here on this slide is obviously a global thing, but it's not very off mark when we talk about India, right? So I'll leave this slide, I mean, pretty much self-explanatory for a while so that you can have a look. But meantime, let me pick certain questions. Again, as I mentioned, in case, Pratik, I think I answered your question, right? If you're okay in maths, then probably you would like to go for CFA. But again, this can again not be a sure sort of criteria. Again, I mean, as a thumb rule, if you don't know what does an FRM do, then it's safe for you to do an CFA, because FRM should only be done if you specifically want to work in market risk, credit risk, operational risk, right? It's a very focused field. If you don't have an exposure and you don't have a strong reason to believe that that is the only area you want to work, then it's much safer for you to do CFA, because then it makes much more sense for you to prepare for, let's say, wider set of jobs, and depending upon where, see, your career choices is a function of two things. One is your interest, second is your skills, and third is the also opportunity, which is the unfortunate part, but that's how it works, right? I mean, a lot of people become what they become because they got opportunity in that field, right? So as a young person, I will not, I'll try to make a balance between all three, which is your interest plus your skills, as in your strengths, as well as the opportunity you might get. Keeping those three in mind, as a fresher, probably CFA makes much more sense than FRM, unless you have a very strong reason to believe that market risk. I mean, I really doubt you will have a reason as a graduate to do FRM so strongly. I will not say it will be a bad idea, but in comparison, you will probably find CFA a much better idea, even though it takes more time and more efforts. Right. So when I say efforts, you basically should realize that both level 1, level 2, level 3 are FRM level 1. FRM level 1 and level 2 typically takes 200 to 250 hours. CFA level 1, level 3 again takes between 250 to 300 hours. CFA level 2 will probably take 300 to 350 hours. Out of these all 5 levels, CFA level 2 is considered to be the toughest, right? Sanwas, I've gone through your point. I'll say if you can do PhD in finance, please go ahead. Don't try to do from any XYZ college. I mean, in PhDs, your professor matters a lot. But if he has a good experience, as in good name in industry and academics, then you should surely go. I mean, I don't think there is any confusion in that. But let's say you don't have a choice of really great names in PhD, then given your track, you would like to go for FRM because you're already working as a credit analyst in PSB. FRM makes quick sense. Unless you want to dramatically change your profile, etc., then in that case probably you would like to explore CFA also. Otherwise, if you want to do much better and basically idea is to, basically enhance your skills, then FRM makes a lot more sense, right? Siddharth is saying I want to go into analytics, M&A, valuation, etc. I do basically, so I think CFA would make sense, but I heard of CPA. No, I don't think CPA will make you. I mean, CPA is basically for portfolio management advisory kind of a thing, if I'm not very dramatically wrong here. Again, see, when you are saying IB, if you're talking about research, yes, CFA will prepare you. But if you're thinking of being, let's say, that suited, booted investment banker who will do, 600 million merger acquisition deal, then again CFA is not the best track. Best track is one, you need to be very young. So if you're already past 21, 22, you're already a little late. Second is you got to be extremely bright. And then third, you need to do your MBA from Ivy League, which is top 10 in USA, or probably at max top 10 in India, which is IMABC or maybe ISB Max, right? And then again, you have to be again cutting edge, extremely brilliant, etc., to get those jobs. And in any case, that space has been shrinking in the last 7-8 years. It is a very tough world right now. I won't say it will die for forever, but Tier 1 MBA, I mean Ivy League MBA are top 3-4 names in India is the only sure short kind of a route from IB to get into that side of IB. But by IB, if you meant research, etc., or valuation, etc., then CFA makes much easier sense. Don't waste your time with any other certification. Travis, by technical, what did you mean? So Travis has a question: how advanced is the math within FRM, and which designation do you think is harder on the technical side? So by technical, what did you mean? I mean, is it the technical trading, or is it the technology IT skills, or the maths? I mean, if you can clarify, I'll answer that. But for first part, FRM, see, one thing is Travis and others, and I'm sorry if I have created confusion in some of your mind. See, it's not that you need to be so good that you will do, all that differentiation and integration. But at least you should understand, how a series looks like, what is non-linear equation versus a linear equation, what is a quadratic equation. If you have a bit of math background, you will understand it. Otherwise, you will struggle. You might still gain a lot from FRM because no other course will teach you how do you typically evaluate credit risk, market risk, what is VAR, what is Basel III. I mean, CFA also doesn't talk about all this, right? So if you're already working like Sanwaz is in credit analyst, I mean, for you it's a no-brainer to do FRM, irrespective of the fact whether you have a background in maths or not. Having said that, if you have maths, obviously you do much better. One, to clear the exam, but more than clearing the exam, even to excel in that field, right? So that's what I mean by, I mean, more you know, better it is. Purely clearing exam, probably if you understand numbers, you can still clear the exam. But that's not the only criteria of choosing a field, right? Pratik, did I answer your question? So Pratik, I mean, if stock markets are your only interest and you want to be a fund manager, then I will say CFA is necessary but not sufficient. Right? Necessary as in, again, the safest track. So this is the best option you will try, with a caveat in mind that it might still not work because it's a small field. There are other reasons also, but purely on the academic points, no other degree will make you more equipped to be in that field, right? Shamli, Shamli is saying I am from law background, but I want to work as an analyst. Then should I try for CFA or MBA? By analyst, I think you mean either a macroeconomic research or equity research, etc. Again, since you have a law background, you might like to evaluate corporate law. That, along with CFA, works wonderfully well in PE and VC space. So first, please explore that space. If that's not is what is of interest to you, then probably you can surely look for MBA also. I mean, see, MBA any day is a much safer option, but when I say MBA, it has to be top 15 period. Anything below that, you'll rather focus on CFA. So MBA plus CFA, great. Only MBA, good. Only CFA, good. When I say MBA, it's top 15. Anything less than that, you should focus on CFA rather than MBA. Another major thing which I would like to say, at least in India, another problem with some of these top colleges is they have become so competitive that they reward intelligence over the attitude, right? So unless you're a born genius kind of a guy and a 99 percentile kind of a guy, you can't even crack the written. Forget about doing well there, right? Now what happens is life is not that discriminatory, right? You will find a lot of intelligent guys who might not be super intelligent, but they are having much better attitude and they do much better in their life. And CFA and Western education for that matter, in fact, that's why you will see, I mean, a lot of Indians get shocked of their life when they realize that Harvard has a cutoff of GMAT of 650, but ISB and Ahmedabad will have a 730-40 because I've been enchanted with, finding that 1% guy kind of a thing. So we are very bothered about this written test, but Western education is not. And in that sense, again, one thing you guys might like about CFA and FRM is it doesn't necessarily is a stamp on how intelligent you are, but it is surely a stamp on how motivated and committed you are about certain things, right? So it rewards your efforts much more than your intelligence. Okay. So some of you are saying this was supposed to be done by 8, and I think we are already 8:15. So let me quickly go through the remaining slides, and then I can take on more questions, right? If that is okay with you. So again, this I want to talk about. In fact, I somehow missed. The FRM as a concept, obviously no one was interested to talk about risk management before 2007-8, right? And suddenly people realized, corporations realized that risk management is just not a time pass, it has a purpose. In fact, more than purpose, it adds to the competitive advantage. Another is after every recession, people focus more on education because life becomes tough. Without a competitive edge of better certification, bigger names, etc., you can't do that. Combination of both is what you see on this graph. which is a sudden jump up in the number of people who are doing these certifications, right? Again, some of the big names, pretty much everyone in finance space, people who are on FRM, right? In fact, most of these institutes refund money if you do CFA and FRM, and that's again a recognition of the fact that these institutes find these courses very relevant to their jobs, the jobs their employees do, right? So most of these banks and fund managers, management companies, etc., they refund your examination fee if you clear these exams, provided you are an employee, obviously, right? So, career prospects in India and abroad, CFA specific, captives of investment banks. I talked about private banks, they have started hiring. Buy side is basically fund management side, economic research I talked about. Market analytics, again, this is one major job. So, I shouldn't talk about names here, but just as an example, so Credit Suisse and Nomura has their market analytics unit in Mumbai. Credit Suisse has in Mumbai and Pune. Deutsche has, Goldman has in Bangalore, Bank of America has in Delhi, right? American Express has a credit analytics unit in Gurgaon, right? So a lot of jobs, and not only some of these big names, but some of the smaller names also. PE/VC firms, again, the biggest space. Most of these deals happens from Singapore, Hong Kong, but a lot of this work happens from Mumbai also. So that's one space. FRM I talked about, auditing, treasury, credit risk, advanced risk analytics, right? Quantitative finance roles I talked about, especially while answering Travis' question. If you want to go on that space, probably MFE etc. will be a much better track compared to CFA and FRM. Abroad, again, purely if you're based out of India, Gulf and Singapore is easier to crack because of visa regime there, and jobs are still there. Obviously, the G8 market is very bad, and they have put in a lot of visa restrictions. But probably Australia, Canada is still little. I mean, I will say it is more driven by visa regime rather than anything else. And in that sense, at no stage you should think that if you do CFA and FRM, it's a globally recognized course. In that sense, you get a chance in environment. It doesn't work like that, right? Purely because of certain other factors also. Though you will be as competitive as anyone else looking for that job, but purely because of a bit non-availability of visa probably will not be considered, right? But in Singapore, Hong Kong, Gulf, Singapore is more suited for Indians, and Gulf always remains open, right? When I say Gulf, it's basically Dubai and to a certain extent Doha, right? So how do we maximize gains from these financial certifications? This is the last slide. So really sorry for those who are, basically I overran the time for this webinar. So again, one thing I've realized that many times people find these certifications as a panacea for everything else. Life is never so simple, right? No one can tell you that you just do it and you will be like, wow. It doesn't work like that. So you explore communities is what I talked about, which is, surely try to join CFA communities in your cities. Especially, India, it's fundamentally active in Mumbai and to a certain extent Delhi and Bangalore. It's a bit here and there in Hyderabad, Calcutta, Chennai, and Pune also. But if you're in Mumbai, obviously you should do that. Building on industry knowledge, that's important. One thing again you should realize that if you do CFA and FRM, it gives you a chance to get an interview option, right? To clear that interview, you should not only know the basics, but you should also be in a situation to probably answer why rupee is at 68 and where will it go. You might be wrong in the prediction, but you should at least be good in your analysis, right? And why it happened, even if you can't talk about what will happen, right? Which in case no one can talk about, right? So industry knowledge is not only the currency, but in general, what is European crisis, what is happening with banks, why do we evaluate banks differently from, let's say, an IT company, or what is the difference between a metal cycle or a real estate cycle, right? A lot of this you will gain. CFA will train you about these things, but if you add it to the relevant latest gossips, it helps in clearing interview, and there is no substitute. You can't be a plain barren vanilla CFA who doesn't know what is happening in the market because you are busy clearing your CFA chart. It doesn't work like that, right? And surely the macroeconomic knowledge. I will not expect you to become a master of equity research because without data, some of especially banking research industry, you can't do research. Pharma, if you're not from that background, you can't do, right? Probably as a graduate, you can only do research on some of the consumer names or auto names. And that's easy, right? But more than that, macroeconomics you can surely get, right? You can understand why China is important, why within BRICS India does well if commodity cools off, but Brazil, Russia do well, right? Some of those basic things. Then LinkedIn, a must tool in today's environment and more so in finance because of the fact I talked about the importance of networking. And why only restricted to LinkedIn? Try connect to your alumni, college seniors, relative, etc. Right? And then there are focused job sites, financialcareers.com, imjobs.com. You do a little bit of Google. So there are specific finance job sites which open up these opportunities, and surely try to add advanced Excel, VBA, macro skills, at least Excel, right? There is no way you will do an analysis job or an analytics job or risk management job without being extremely good on Excel. Even if you are working for big names, they might have sophisticated systems, but end of the day, data will come on Excel and people will do analytics on Excel only, right? So that's what I wanted to tell you. I have been taking questions. I'll take few more. Do let me know if I missed something fundamentally which you thought will be covered but isn't. Let me go through a little before. Is it good for just a graduate to do CFA, or should this be complemented with PG degree? So see, Vinay, if you can complete CFA charter holder, great. But as a graduate, I'll rather ask you to focus on getting a good postgraduate, let's say masters in economics kind of thing or MBA, if you can manage. Otherwise, see again, I'll refrain from giving a very clear-cut answer on this because any combination works as long as you're good at it. Safer will be to probably be a little slow on CFA, side by side, focus on post-graduation, etc. Because CFA can wait, PG cannot, right? For let's say for some reasons, for next 2 years you only prepare for CFA and you don't do your masters, and for whatever reasons you don't clear CFA level, you'll feel lost in the scheme of things, right? In fact, best is to probably get a job. If you get a good job in finance, there is no substitute for that kind of a work experience, and during your work you can probably look at some of these certifications, right? Vinay is again saying you are always saying that CFA is much more recognized outside India than as an Indian wanting to work in India. Should CFA be considered? First of all, I am very curious why you want to work only in India, right? Your dollar value is coming down of you as an individual. But anyways, that's on the light side. See, when I said it is more recognized, I didn't mean that it's not recognized in India, right? So if you want to work in capital markets, I don't want to become a salesman of CFA and FRM as a program, but it's a known open secret that it is probably both of these certificates are very recognized even in India, right? It's more recognized globally. That's also a fact, right? And again, as I talked, things are changing dramatically. 3 years back when I did my CFA and FRM between period 2008 and 10. And in 2008, in some of the internal job interviews, I needed to explain what was CFA, and it was literally heartbreaking because when I was doing CFA, I was doing Google, and I was under the impression that pretty much everyone will say, "Wow, you are a CFA kind of thing." But some of the industry veterans in India didn't know. But then, what I also see that in the next 2-3 years, and things changing so fast, a lot of people are now knowing, and probably 2-3 years down the line, anybody working in this field, it will be very rare that they have not even heard about these certifications, and in that sense, it doesn't realize how important or valuable these skills are, right? Pratik is asking, will CIA and CFA will make a good combo? First of all, CIA is very costly. It's much lesser recognized. It's focused on hedge funds and alternative investment. It should only be done if you've already got a. I'm giving a very strong recommendation, but I'll say, don't go for any XYZ course. It's a good course, but nothing in CIA will be there. 70-80% of that course will already be covered in CFA. CFA will prepare you for many other things. So unless you are already working in real estate or commodities or hedge funds or PE or VC, and in that sense you only want to work in alternative investment, then do a CIA. Otherwise, first focus on CFA, and then maybe depending upon your job opportunities, etc., you can focus on CIA. for benefit of others, he's trying to say, should I focus on both chartered analyst for alternative investment kind of course and CFA, right? So my advice will be to first focus on CFA, get that recognition. In fact, a lot of people might even say that CAIA, doing CAIA after CFA is overkill and not required also, right? Samas is saying, I'm from IT background, but I'm quite good at derivatives and heading for FRM level 1. I want to ask you what are the career options in derivatives. So if you mean in derivatives, obviously risk management space, pretty much. I mean, you are an ideal vanilla case for people who want to work in risk management. By IT background, I believe you have a bit of coding background. In that sense, after this, you can head into any risk management unit of any of these big global banks, even Indian banks also. So, I mean, if there are options are for your kind of people, right? Plus, not why only banks, you can have a look at some of these names like Pfizer, SunGard, Calypso, Headstrong, some of the very capital markets oriented IT product side. They reward you heavily, they pay you well, jobs are very satisfying because these are very domain centric roles, right? So if you go to SunGard, having cleared your CFA, you will probably realize CFA was still easier rather than clearing an interview from SunGard, and some of those interviews can be pretty technical, right? Because these companies are at the forefront of markets, right? SunGard systems are used pretty much by all exchanges and some big banks, etc. So these are very competitive jobs, and you can surely aim for that. You can obviously aim for business consulting profiles. I mentioned it earlier also with IBM, CSC, etc. So banks, global banks, IT product firms, plus IT consulting units, right? That's what you can surely focus, and then obviously there are other options also. Sanjeev is saying, how does FRM CFA benefits R&D engineer or scientist? Sanjeev, frank answer is it doesn't benefit if you want to remain in that field, but at the same time, you will be happy to know that there are enough examples, and solely in USA, where people from science background, especially PhD in maths, etc. I mean, in fact, I work for International Bank, and I see a lot of senior guys around me, including one molecular physics PhD kind of a guy. I mean, Wall Street historically have hired a lot of physicists, but that's only not because physics is important on finance side, but just because if you're good in science, you'll naturally find finance interesting, and you'll be capable to easily pick it, right? So FRM CFA will not benefit you R&D engineer scientist side. In fact, it will be other way around, because you're good in science, probably you can do well in finance. Vanda is asking, is financial modeling a must for CFA? See, financial modeling, Vanda, is a very abused term. People use it in different sense. But by financial modeling, if you mean Excel-based modeling with a little bit here and there, then I will say for doing CFA, it is not a must. In entire CFA, you not even open an Excel. But if you want to do in financial world, then obviously you should try to add Excel skills on the top of these certifications. Okay. Pratik is saying, is CFA easy enough to clear even if we are working? Obviously not. I mean, what else it can be? It's obviously tough, and that's why people struggle. But again, 70-80% of the people who clear CFA are people who are working. Because the other side of the fact is, especially if you're working in finance, a lot of these courses you'll find very interesting, which as a graduate, sometimes you struggle to understand the context. So work experience help you to remain very motivated and interested about these courses. But obviously your work demands will be a hamper to your professions. So it's a both plus and minus kind of thing. Okay. Pratik is saying, I don't want to do any job, I want to make your own organization. So Pratik, you already wasted 1 hour 30 minutes. I don't think entrepreneurs need any education, right? Okay. Unless you want to make a trading firm, etc. Again, I don't think CFA 5, etc. is a suitable choice for you. Amit is saying, CFA and MBA from decent day school in India, decent like anti-Gaia, but will this combo helps in getting a good placement in financial institution? That's a perfect recipe for a good, nice little career in finance, Amit, and you got it pretty right. One thing I'll also let you know, probably market will value your CFA degree more than anti-Gaia MBA, but that's the ideal degree combo which people try to capture, and your thinking is pretty correct on that front, right? Vinay is saying, what are the salary ranges for CFA in Mumbai? So I don't think a CFA charter will be a jobless, but given his experience, work experience, etc., it can be anything from 5 to infinite kind of a thing. I don't want to bracket. I mean, that's demeaning for the charter to talk about in such monetary sense. But I'll rather tell you other way around. Finance obviously is the most rewarding field. Even in the first time, people with like 7, 8 years, 10 years of experience are easily paid double of what they will get in any other industry, right? CFA helps you to be there, but don't think because you are a CFA you will be there kind of a thing. It's a function of many other things also. Okay, that's it. Then there are some off-track questions. I'll probably avoid those questions. So when I was asking what are the requirements for starting investment advisory business, when I some other day I'll take some of those questions. You can probably do a little bit of Google on SEBI website, etc. Depending on what products you want to cover, there will be different regulatory requirements. But that was not the purview of the webinar, so I'll not take that question. Okay, thank you. Thanks, guys. So hope I did justice with your expectations. If you have any further questions, you can drop a note to Christine mail ID. There is a pool of faculties and industry veterans who will be happy to answer your queries. So in fact, I'll give you the mail ID where you can send your queries and people will be happy to answer for them. Right? Thanks, Manna. Thanks everyone.